the technical analysis. So this class is actually being recorded too for those that will not be on ground. So that is just it. For technical analysis is the use of history, like historical chart data, to predict the movement of the market. Now, okay, I think I have to introduce myself. I did. The class is just my. Okay, I'm Sarah Abamba. That is my name. I'm a trader, first crypto trader. I'm also a writer. Yes, I do content writing, basically on forex and crypto stocks too, for blogs and all of those stuff. So this is what I do for a living. Okay. I've been trading since 2020, coronavirus period. You know, a lot of persons went online, started looking for online opportunities during that coronavirus period, of which I did too. I came to the online space in 2020 and I've never regretted it. I've been there. I've not worked except when I went for service, but that's what I've been doing all this while. Okay, so we're going to go into technical analysis proper. Technical analysis is the use of historical price data to predict what is going to happen in the market, to predict the future movement of the market. So technical analysis, what we basically use for technical analysis is our charts. I will not be going into more stories. So I will just go into the class straight so that there won't be any need for me to be doing much of talk there. So what we are going to be looking at today, since we are looking at the basics of technical analysis, we are going to be seeing the supports. We'll see support, we'll see resistance, we'll see the market trends, which is the uptrend and downtrend. And we'll also see we'll also see the shopping markets and the ranging markets. So that is what we will look at basically in our technical analysis today. Then if time avails us, we will do other stuff, like we'll go further because we have a lot of things that we're going to learn. It's a full forex class. So till the end of the month, it's a full forex class. So we have a lot of things we are going to be learning. So we just have to be going like as fast as we can and as slow as we can too. So that is just that for that. So I don't know if we can see my screen. Please, you can mute yourself and tell me if you are seeing my screen.
Yeah, ma, I can see your screen, ma. I can see.
Okay, what are you seeing on my screen?
Okay, I'm seeing candlesticks, green and black.
Green and black candlesticks. Okay. Is that
I
all?
can't see.
Okay, you can't see my screen.
Yeah.
It's black. It's black, ma.
It's just black.
Yeah.
Okay. I think I have to.
I can see your screen.
Okay, some persons are seeing my screen, some persons are not seeing my screen. All right. Let me see. Let me go back.
I can see it now. I can see your screen now.
Okay. All right. Let me just share again. I want us to be seeing what I am seeing. Okay. Can you see my screen?
Yes, I can.
Okay.
I can see it.
So what are you seeing now? I want,
See price. You can see price action movement.
Charts. I'm seeing charts.
okay, I see my
Price
chart.
movement.
Okay. All right. So this is the chart that we'll be looking at. This is trading view. For those of us that don't know what trading view is, this is trading view, and we are going to be using this for our technical analysis. This is what we'll be doing with our technical analysis. So
In a clinic, can check my phone.
okay. So this is the chart, and what we are seeing is this green and red stuff. I don't know why I'm still going to basic stuff. Is what we call the candlesticks.
But yeah,
For those
phone
that
now.
don't know. Where is it stopping me? Next. For those that don't know, this is the candlesticks, and we use our candlesticks to predict the market. This is what we use to predict the market. I think let me just go back. Now, when I say historical chart data, it's things that have happened before in the markets. I'm scrolling back, like back and back and back and back. So these are stuff that are happening, that have happened in the market. If you can see down, you will see August 2022. That is 2022, sorry. If we continue going back, you see that. So that's why I say technical analysis is the use of historical chart data to predict the movement of the market. So what has happened before will happen again. That's what we see with technical analysis. Okay, so I'm going to teach on support. Let's see support first. Let's understand support. Support is okay, support is a place below the price. Support is a place below price that market starts to buy from. Support is a place that is below price that markets buys from. So for instance, let me go to where there is no candlestick so that I can draw something there. Okay, okay, this is what I want. Let me use my brush. So for instance, we have something like this. I hope you are seeing what I'm drawing. Something like this, something like this, something like this, and this. This is support. I'm explaining support. So this support is this, like this line. If you notice, anytime the price gets to this place, it always goes up. Anytime market gets here, it always goes up. This is what we mean by the support. A place below our price from which the market starts to buy from to go up. I explained buy and sell. I explained the buy and the sell. So anytime market gets to a support, it will bounce up. Anytime market gets to a support, it will go up. Anytime market gets to a support, it goes up. Now, using this as an example, we just simply say when a market gets to a support, you place a buy order. Why are you placing a buy order? Because there's every tendency that market will reverse from that place. So the market has actually been selling, like the market is selling down, market is selling down, market is selling down, and it just gets to a support. Although there are other confirmations which we'll see later, but let's get the concept of support and resistance first for now. So when the market goes to a support zone, you place a buy order. Now I talked about stop loss and resistance. You place your stop loss, stop loss and take profit. Your stop loss is placed below, like somewhere below this place. Let me use the brush again. Somewhere below this place, like just below. After placing a buy order. Now I'm going to be going through our chart because we have to see examples in the chart so that we will not be will not be seeing theories and theories. So we have to look at the chart. This is the practical session of our training. This practical session of our training. So let's go back. Okay. We are going to be looking for our supports together. Let me go to a lower time frame so that we see good examples of support. Some persons are actually sending messages. Sorry, okay, let me see. If I open messages, I'll be distracted. So let's just focus on the class so that immediately we are done with the message with the class, I can view your messages. I think that is better. Maybe ask a question, but sorry, I can't view it now. Okay. We're trying to get support areas from which market buys from. Now, one thing you want to know with technical analysis is that you have to be patient. One, you have to be patient and you have to shine your eyes because you are dealing with things that have happened before in the market. So you have to go to previous data. Now, for instance, you can see this place. Let me highlight it. You can see this place. I hope you are seeing this place. We are seeing this place. We are seeing this place. Here and this place. Now, one thing you will notice with these places is that anytime market gets here, it goes up from there. Anytime market gets there, it goes up from there. Now, this was done 1, 2, 3, 4, and 5. Now, one thing with support is that when you see these areas like this, you use your I use my horizontal bar. I think this is TradingView. So as I'm doing it, you're also learning how to use TradingView too. So this is my rectangle here. I'll just put it like this. Okay. I'll just draw it out so that I'll be able to capture the areas. I'll know that anytime the market gets to this place, what I will do is to place a buy order. This is basics of technical analysis. So because we'll be saying more, we'll be adding to everything that we are learning. So know your support now. When you see that the market gets here, it went up. It came again the second time, it went up. Now the third time, I'll know that this is a support. So when it gets here, what I'll do is to simply place a buy order. I'll place a sell order below it, just right below it. And I will allow the market to what? Go up. This is a support, buy. When the market is at a support, you place a buy order. It's just simple. When the market is at a support, you place a buy order. Now you will notice something here, like in this place, something happened here. The market actually got to this support after testing it for 1, 2, 3, 4, and 5. So this 5th time, it actually didn't really go up, but what it did was to break it. Hope you are seeing it. Now, the more a support zone is tested, the weaker it becomes. The more a support zone is tested, the weaker it becomes. So you can see that when it actually got here, it's what? It broke it. So this happens. That's why I said there are other things you will look at before you enter a support or a resistance. We see resistance, so it's still easy. So at a support, I buy and I place my stop loss below the zone, just below. That is for its support. Now, the next we are going to be looking at is our resistance. The next thing we are looking at is our resistance. So for the resistance, you see something like the market, the resistance is, I don't like defining it. I like explaining the concept instead of just doing good definition, but still, let me still define. The resistance is a place above price. resistance is a place above where the market currently is, that market sells from, is a place above price that market sell from. So when you get to a resistance, what you need to do is to place sell orders. So let me use my brush again to make a drawing. Let me use it to make a drawing. So we have something like this. Price goes up and comes down, goes up again. I think this one is too. Let me delete it. Let me delete this too. We just went, it's too much. It's supposed to be somewhat horizontal. That is what it is. It's supposed to be horizontal. So let me continue. Okay. So with our brush, I go down, up, down, and up and down. So if you notice, the market is not breaking above this zone. Anytime it gets to this zone, it bounces down. Anytime it gets to this zone, it bounces down. This is what we call a resistance. The place that the market is resisting, it always falls down from, is a resistance. So you do something like this, like I did, just put a straight line there. And what you want to do is to move it forward, like you will draw it into the future. Okay, let me put it that way. You draw it into the future so that you will not get, I don't know, let me see the chart. Let me know what, I don't know if you're hearing me. Okay, I've muted everybody. Let me see. Please, if you are sending me a direct message, I will not be able to answer you. Okay. There's no sound. You can't hear anything. Okay, can you all hear me? Please use the chat box. Some persons are saying that there is no chat. There's no sound, sorry. Is there? Let me know. I don't want to be talking to myself. Okay, you can hear. Okay. All right, that's good. People can hear me. That is perfect. All right, so let's continue. Like I was saying, I was explaining the resistance. I was explaining our resistance. I said the resistance is a place below price, above price, from which the market sells from. So when the price gets to a given resistance, what you need to do is to place a sell order. And if you are doing this, you just have to draw your resistance, like, to be out of the market, so that anytime the price gets there, you will know that this is a resistance. Okay, you will know that this is a resistance. So you will not place a buy order at a resistance, because if you place a buy order at a resistance, the market will actually clear your stop loss. It will clear your stop loss. So let's go to our chart. Let me see if I will use let me use another pair to look at this for our resistance. That one thing with technical analysis is that you just have to, it's a must, you must go back, you must scroll back, like just go through your chart so that you will see details in the market. Don't just open your chart and see one thing happen and it's okay, the thing is selling, let me start selling. You may get bumped. So you go back to just look at the market, and see what is happening in the market. So I'm looking for resistance. We are doing this together. Please, I teach. We look at it together because I will not just mark it and come and show you. Okay. Let's view it together. This is April 2023. Okay. This is January 2024. Now, if you can look at this place very well, let me mark it out. A rectangle. can look at this place very well. Market was buying, but when it got to this place, it actually sold. Let me please. Okay, the market was actually buying. It got to this place. Let me draw this one so that it can cover. Okay. So it got to this place and it dropped back. I think this is January 2023. Now it came here May 2023 and dropped. It came here in July 2023 and went a little above it, but still dropped. Now again, it touched its own in December 2023 and still dropped. This is a resistance, like a confirmed resistance. Anytime it gets here, the market drops. Anytime it gets here, the market drops. This is what we call a resistance. And in a resistance, what you do is to sell. What you do is to sell. What you do is to sell. Okay. So this is for resistance. Now, when you are placing a trade in your for a sell trade for the resistance, you just need to put your stop loss above it. You can see where my cursor is. Just put your stop loss above it. In case the market reverses, like what we saw in the support, whereby the support was broken. A support can be broken after multiple touches. A resistance can also be broken after multiple touches, because if it's always like that, you know that this will be very, very fun and easy. If it is not broken, if no resistance is broken, if no support is broken, you know that every time it gets there, you sell. So the market doesn't work that way. So sometimes after 3-4 touches, the market, that place, that resistance will be broken. Now, if a resistance is broken, it becomes a support. If a resistance is broken, it becomes a support. If a support is broken, it becomes a resistance. I hope we are getting what I'm saying. If a support is broken, it becomes a resistance. If a resistance is broken, it becomes a support. So I don't know if I can get examples now. If I can just go to my chart so that we'll see some examples of what I'm saying of broken resistance and support. Okay. I think I just saw one now. Let me use my horizontal bar to highlight it. So this was a support. This is a support. So market got here and market was selling actually. And when it got there, market was selling. It got here, it stopped selling and started buying. Just bought. It came here, bought a little and was just dancing around it. And it finally came down and broke it. Now, when it broke it, you see that the market became a resistance here and it started falling and it fell very well. The fall was great. The fall was actually good. Now, if I extend this support, it was a support that was broken and it became a resistance. You can see what happened here. This place, it still came to the same zone. It still came to the same zone and see what fell through it before it was already broken again. So I'm explaining support becoming resistance, support becoming resistance, resistance becoming support. So when a support is broken, it becomes a resistance. When a resistance is broken, it becomes a support. I hope this is clear. I hope this is clear enough for us. Now you can see exactly. Now, it is not safe to trade against zones. Now, like I said, the support is not one place like here. All the resistance one place like here. It's in zones, like it's in zone. So this is a zone of the zone. That's why some can be higher than others, but it is in still the same area. Some can be higher than others, it's still the same area. So this is for the support, this for the resistance. So the next thing we're going to be looking at is our trends. We'll be looking at our trends, the trends in the market. People will say that there are 4 market trends. Me, I don't go with that. That's the truth. I don't go with 4 market trends. I mean, No, I said there are three, sorry. May I go with four? I will explain myself. I go with four market trends. So there is the uptrend, then the downtrend, there is the ranging market, and there is the chopping market. So I will explain. Some persons use ranging and shopping markets simultaneously. They can say it's Shopee or ranging. Some person will say it's a shopping market, some person will say it's a ranging market. So I will actually explain why I said it's different, it's not the same. Okay, so let's look at the uptrend. Let's look at the uptrend. The uptrend is a market the uptrend is, hope you can hear me. The uptrend is a market whereby we have what we call higher highs and higher lows. Higher highs and higher lows. So I'm going to use my brush for this. Higher highs, higher lows. I know some persons that are already trading will know this. It's not new, but for those people that are new, please, this is, so you see something going like this and going like this and going like this. So this is a low L. This is an I. So this one is a higher low. This one is a higher. I'm trying to write it. This is a higher high, and it continues like that. Now you will notice that this low is low. This one is high. So this low is higher than this low. This low is higher than this low. This low is higher than this low. And for the highs, we have a high. This high is higher than the previous one. This one is higher than the previous one. So that is what we say. That's why we say it's a higher high and higher low. So this is an uptrend. Normally, what we do is to use a trend line. I will use the trend line here now for us to see. To connect the highs and the lows. We use our trend line to connect the highs and the lows. That's why we call it an uptrend, because the market is going up. The market is trending up. So that's why we call it an uptrend. The market is trending up. So for an uptrend, what you basically do is to place buy orders. Is to place buy orders at the lows, not at the highs. Please, you place a buy order. So for instance, you can place a buy order here. The first low, you may not even know with the first low, but from the second low, you know that this is an uptrend. So you place buy orders here. Don't place buy orders at the highs. Why? Why? Because if you place a buy order here, the market will definitely go down. These are what we call pullbacks. 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 So the market will definitely make a pullback, and your psychology may be affected that, oh, this trade is not going my way. So you click out of this trade and you lose money. So what you just have to do is to wait. If you see the market going up like this, you wait till the market gets to, it makes a pullback to a higher low, then you can join the market. So you can place buys here, you can place here, and you can place here. This is for the highs. This is for the uptrend. So you place buy orders in an uptrend. Please, it is not advisable to place a sell order in the market in an uptrend, because you will be trading against the trend. If you trade against the trend, you will have yourself to be blamed. If you trade against the trend, you will have yourself. Okay, my voice is breaking. Is it still breaking? Please let me hear us. Use the chat box. My voice is breaking. Are we good now? It's better now. Okay. Thank you. Okay. Thank you. So since I think I have to go back, I don't know. I have to go back a little so that we can understand. My voice was breaking. Okay, I should start from the low. Okay, let me just delete this stuff so that I'll see somebody unmuted himself and is stopping out.
I know, great one.
I think I have to mute. I have to mute everybody so that.
I am running out of patience.
Oh yeah, everybody's muted so that will not disturb our class. Let's continue. Let me delete this stuff so that I will do the drawing again. Somebody said I should start from the low because my voice was breaking. So let me just draw from here. So I said an uptrend is a market whereby it makes series of higher highs and higher lows, but it's just going what up. So we have a low, we have a higher low, we have another higher low, and the next low is high. So we have something like this going up, like that is what an uptrend basically is. So what you do, the simple thing you do in an uptrend is to buy. It's as simple as that. A simple thing you do in an uptrend is to buy. Don't place sell orders. When you see that the market is going up, no, it's wrong. Don't place sell orders when the market is going up. So let's quickly look at our chart and see. Okay, I've not seen. Let me scroll and see. Okay. Let me go to a lower time frame so that we will be able to see very well. I think I may need another okay. Okay. Okay, this year is an uptrend. This market here is what we call an uptrend. See that the market was going, it's tested a support 3 times. This is a support, this is a support, this is a support, and it just went through it. Now you see that this was a resistance. The market came down from here and broke it. And when it broke it actually became a support here. Now this is what we call retest, though we see retest later, not now. I don't want to bore us with many information. We'll be taking it bit by bit. So when the market broke through this resistance, it started going up like that. So this is a low, this is a higher low, this is under higher low, and this is under higher low. So what you do in an uptrend, when the market gets to a higher low, you place a buy order. Let me expand my chart and see. When the market gets to a higher low, I'm just opening up the chart so that you can see things properly. Okay, here we are. So when the market gets to a higher low, you just place a buy order. So if the market gets here, I place a buy order. The market gets here, I place a buy order. Please, let's all mute so that we will not be. Okay. So you place buy orders at where? At the lows of the market. This is what our uptrend is. Forex is actually not difficult. The analysis part is not difficult. You just have to know what to stick to. So this for uptrends. So the next we'll be looking at is our downtrend. The downtrend is where the market makes a series of lows, like lows. The market is just going down, like down, 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 down. This is what um a downtrend looks like. So for instance, okay, this one is an uptrend. I want to look at I love using good examples. Now, okay. Now this is a downtrend. This is basically a downtrend. See the market going down, like it came down, did a pullback, came down, did a pullback, came down, and it went on the way here, did just like this. Now it's either the market pulls back or what we call consolidates. Now this is actually a pullback. This is a pullback. Why this is called a consolidation? This is called a consolidation. So when the market, okay, we get there, don't worry. So it's just like that. It's just like that. Now, even though this is a downtrend, it would be very, very, very wrong for you to place a sell order in somewhere, this place. You get, it should be very, very wrong for you to place a sell order here because you are entering in the middle of a trend. So what you do is to wait for pullbacks. What you do is to wait for pullbacks and what? And or consolidation. When the market gives a good signal, we should be seeing those stocks as we continue in our classes. That is when you enter the trend. Now the pullbacks gives you opportunity to enter the market. So for instance, I miss an entry here. So with this pullback, I'll be able to enter, continue with the sell trend. Maybe I miss an entry here. With this consolidation and pullback that happened here, I'll be able to what? To enter an entry in this place. This is why the market pulls back, because the market does not go straight down. Like, the market does not go straight down like this. No. It must be something like this. It has to be like this. That's how the market goes. That's why if you enter the trade wrongly, even though you are correct, maybe even though you place a sell order in a downtrend, because of these pullbacks, you may be afraid that the market is not going your direction, but you are the one that did not enter the trade at the right time. So there's what we call timing too in trading. There's what we call timing. If you enter a right trade at the wrong time, you will still be knocked out if you are not patient enough. So that is for the downtrend. This is the downtrend that we are looking at. What we do in the downtrend is sell. Okay. So the next one we'll be seeing is our ranging markets. The ranging market. In the ranging market, prices just moves between support and resistance. Now, I love the ranging market so much because it makes me trade back and forth. So the ranging market is such that the market gives equal highs and lows. Equal highs and equal lows. So you have something like this. You see, there is no cheating. Equals high and low. And the market goes between support and resistance. Like, look at, it just bounces back and forth between support and resistance. This is a ranging market. Now, for the uptrend, we know during our basic class, we saw bulls and bears. During the basic class, we saw bulls and bears. For the uptrend, the people that are in charge of the market are the bulls. In an uptrend, the bulls are in charge of the market. In a downtrend, the bears are in charge of the market. But in a ranging market, neither the bulls nor the bears are in charge of the market. So it just flats. Now, a good trend is gotten when the market either breaks above or below it. So maybe the market breaks below it. This is where you know, okay, if the market breaks below, you know that you are heading for a downtrend. So maybe the market breaks below it like this. You wait for it to come back to retest it, something like this, and it falls down. Or the market breaks above the range, that is the resistance. It goes up like this. You wait, comes back to retest and it goes up. So this is where we call, okay, this our ranging market has been broken. The ranging market has been broken. But still then, when you are in a ranging market, if the market gets to a support, you place a buy order. In a ranging market, you place a buy order at support. While at the resistance, you place a sell order. Now, you know this. If it's going towards the resistance, you place your take profit like, don't place it exactly on the resistance. Don't. If you place a buy order, don't place it exactly on the resistance. Place it a little below. Because like I said before now, this is a zone. Is a zone. It may not necessarily get to this exact point, but it can still be around it and drop back. So since it's a zone, just place it a little before the resistance. This for the ranging market. Now, if you want to enter a sell here, place your take profits a little before the support so that you will not lose what you have gotten. You will not lose what you have gotten. So your stop losses should be below, like below the zones. Don't enter a buy. You see that the range is equal. A ranging market is equal. So if you enter a buy here, don't leave it and say you want to, if it comes down back to this place, all the profit you have made, you will lose it. You will just lose your profit. So it gets here, you sell. That means you exit your market. You take your profits. You wait for a confirmation. If it gives a confirmation for a sell, you take the sell to this place. When it gets here, exit the market. If it gives another confirmation for a buy, you take again and follow it up. This is what the ranging market looks like. So let's see some examples in Can you hear me now? Can you hear me now? Please let's respond to that. Okay, thank you.
Yes.
Sorry for the
Yes, can- I barely hear you on my own side. Oh.
really.
Yeah,
Is there
I
anybody
can
having the
hear you
same
very well.
issue?
I can't really hear you from my own side.
Is there any other
Your voice
person
cracks
having the
badly.
same issue?
Yes, I'm having the same issue. I can hear you. Your voice is cracking badly from my side.
Oh, sorry about that. Is it better now?
I
can
really
hear
think-
you.
Okay.
My own is even the worst. My side. I don't know if the
Maybe it's your
network is
network, sir.
I
from
can
my
hear.
side or
Yes. Okay.
maybe.
People
I
can
think
hear
so.
me. Maybe it's from your side, sir. It's network issue.
Sir, it's your network. We can hear her very well.
Okay.
Loud and clear. Loud and
All
clear.
right.
I can hear you loud and clear.
Okay. I can hear
Chai, I
everybody.
am
Thank you.
the unlucky one here.
Thank you. So the recording will be posted in the group. Don't worry. It's recorded. Okay.
Okay,
So
thank
let
you.
me
Thank you.
continue.
All
Let
right.
me
Thank you.
continue. Okay, so I'm going back to our chat now. Let me share my screen so that we cannot see. Let's continue from here. The entire market. Okay, we are looking at the ranging market, where the market make a series of equal highs and lows. So I said that there is nobody in charge of the market. So the market is it's just fixed. Okay, the bulls are not in charge. neither are the bears in charge. The market is just going back and forth, back and forth, back and forth. So what you do is just to sell at the resistance or you buy at the support until either the resistance or the support is broken. So I'm trying to get some examples so that we see the ranging markets. I want to get some examples. Okay, I think I've seen a good example for the ranging market. Let me delete this. So I'm going to use my horizontal line to mark our support and the resistance. So our resistance is here at the top. These are resistance. Like I said, this is zone, so it's not just one place. I will teach you how to mark resist, support and resistance so that you don't get confused. Okay, so this is a ranging market. The market range for days. Let me say this Thursday, and it actually broke it on Friday of the next week. So Thursday 14th December to February Friday. Am I saying sorry? 2nd of February. So you can see like it ranged for like 2 months. For like 2 months. So in this market, since it entered the range, from here I placed a sell order. From here I place a buy, sell, buy up, sell down. So just be following the market. One thing about trading is that you follow what the market is giving you. You don't do what you like. That's what trading is. You don't do what you like. You follow what the market is giving you. So until the range was broken, you see that the range was broken. It came back and we tested it. Let me see. Okay, and it went up. So it just came down. So this supports and went up again. But still our focus is on this range that is here. So this is what you do. Now, when you enter the trade like this, you place your stop loss above the zone. Above, if you are selling, place your stop loss above it. And your take profit should be the next support. Yeah, if you are buying, you place your stop loss below it, and your take profit should be the next resistance. This is how you trade a ranging market. Now, if you are marking your support and resistance, please don't do this. Don't use a horizontal line. Don't. It's not advisable because I want to bring up my horizontal line. Your horizontal line marks only a place. You see, it just marks this place. This place was not covered. This place was not covered. This place too was not covered. You understand? That's why I always use my rectangle, because rectangle marks an area, not just a place. So you have something like this. I can extend my rectangle like this. You see, I have covered the area like this. I've covered it, something like this. I'll take this one off. You see that it's different. So this for my ranging market. So the next thing we'll be seeing is the shopping market. The shopping market is very simple. I think it's the simplest because you don't really have to do anything. A shopping market is a market that goes sideways. There's no clear direction in a shopping market. So you have something like market is just like something, nothing serious is going on in a shopping market. Sorry, just focus on this book. So something like this is a shopping market. So if the market is shopping, you don't trade. If the market is shopping, you don't place trade, except you want to wait until the shoppiness is over. Then it goes either ways. But if the market is shopping, you just stay away from the market. Don't trade. Something like this is a shopping market. The market is not trending. The market is not ranging. It is just going back and forth, back and forth, back and forth. This is a shopping market. In a shopping market, just pack your bags and wait. When the shopping net has given you a direction, that is when you trade. I hope we are good. Okay, I hope we are good. So we have seen support, resistance. This is the basics. If you know support and resistance very well, 90% of your trading will be solved. Sorry, I say 90, not up to 90, 50%, sorry. So support is not just support and resistance, they are not just they are not just sorry, I'm missing my words. I know the right word. They are not horizontal only. They can be diagonal. Support and resistance can be diagonal. I'm going to show you how it can be diagonal. So let me use my trend line here. You have something like this. I don't know if you are seeing this that I'm drawing now. This is a resistance. This is the resistance. This is a resistance. So you see that anytime market gets here, it goes down. So this is what I call diagonal resistance. Same thing for the support. This is what I call it, diagonal support and resistance. So it's not just like support and resistance is not just straight. It can be slant. I think this is better. It can be slant. It's not just straight. So this is also a resistance. Anytime the market gets a drops down, market gets a drop down. So this is actually a downtrend. The support and resistance in a downtrend. Are you hearing me at all? I can't get response from anybody.
Before.
I can't hear the audio. I'm not hearing.
Can you hear me now?
Yes, we can
Can you
hear
hear
you
me
now.
now? Okay.
Yes, we can hear
I
you.
was waiting for
Sound
your
back.
questions.
You went offline, so we couldn't hear what you were saying.
Okay. But did you hear about the shopping markets?
Yes.
Okay. Then the diagonal, the slant support and resistance that I drew a slant line using my trend line. Did you get that part?
It was really we are trying
Yes.
to explain, the thing went off. We couldn't get
Okay.
it.
Oh, sorry.
The video is not making sound. I cannot hear any sound though. I cannot hear any sound for what you're explaining.
It was when she was trying to like kind of explain where you can use the trend line. Here
Okay,
you
this
are.
place.
It is where you are. trying to explain the visual and the audio went off.
Just went off. Okay, so I was saying that
It just went off. We couldn't hear anything.
okay.
Even
Okay, I think I can continue now. So I was saying that the support and the resistance is not just horizontal. It can be diagonal. It can be diagonal. Something like this that I drew with a trend line. Something like this I drew with a trend line. So this is a support and resistance in the trend. So you have something like this. Anytime this is a resistance, anytime the market gets there, comes down, the market gets there, comes down, the market gets there, comes down. So you know what to do. Just that this one is not straight, like the examples I gave earlier, but it is slant. Hope it's clear now. Are we good? Are we good? Because this is actually the last thing we are going to be
yes, we
looking
are
at
good.
today. Yeah, we'll continue tomorrow. So please, if you have any question, you can please send it in. Please drop your questions, or you can drop them in the group, because this is tomorrow we go into other technical analysis, because this is not all about, there is in technical analysis, there's still more and more. So
At what time are we meeting tomorrow?
it's 7:30, sir.
Okay.
Yes, sir.
Yeah.
7:30. Okay. Is that all about the question? Let me see. Hey, sorry about that.
Hello.
I will disable waiting room. Okay. You can talk and I can hear you. I can hear you. I thought somebody wanted to say something. Okay. If there's no other question, I guess this is the end of the class today. I'll do a conversion and upload to my YouTube channel so that you can watch from there. So until then, see you tomorrow, same time. If any question comes up, you can drop it in the group or DM me. I will reply you. Good night, everyone. Thanks for coming to my training to share from my
Yeah.
knowledge.
Okay,
Okay,
thank
I'm
you
going
very
to
much,
end
ma.
the
God
class
bless you.
now. Good night.
We
You're
are
welcome.
grateful.
God
You're
bless you.
welcome.
Thank you very much. Good night, ma.